We were waiting for today. We all had here, especially on City News, we all had this date marked on our calendars, December the 7th. We knew that interest rate hike would be happening today. We didn't know by how much. Well, we found out by how much, and we wanted to spend some time today with Clinton Wilkins from Centum Home Lenders. Hi, Clinton.
Hi, Sam. How are you?
Good. Clinton hosts a show on City News here, of course, with Todd Vino, and the opportunity, of course, to share about mortgages and everything people are talking about right now. And it's such an important show, Mortgage 101. Today, you and I had this date marked on our calendars for sure, Clinton.
Certainly did.
And tell us what you've learned from the Bank of Canada.
The Bank of Canada actually just came out with their announcement, Sam, here just about 50 minutes ago. They announced that they're going to increase the key overnight rate by 50 basis points. And what that means to consumers is the bank prime rate now for most lenders will be 6.45. And for most lenders, it'll take effect today.
And tell us what that means for someone driving in their car right now. Maybe they're heading to an appointment and they're thinking about their own mortgage.
Well, if you're in a variable rate mortgage product and you have an adjustable payment, that means that your payment's going to go up. And that may go up as soon as your next payment. Some lenders impact the prime rate the first of the following month. So certainly in the coming weeks, you will see an increase. If you have a type of variable mortgage that the payment is static, I think that is even maybe more of a concern, Sam. Many consumers are getting to what we call the trigger rate. So what that means is the amount that they're paying on their mortgage payment isn't enough to cover the interest, and their amortization now has been getting longer and longer with every increase. And I think in those scenarios, you either need to start increasing your mortgage payment or the bank will start increasing your mortgage payment for you. Some lenders, obviously, with these types of mortgages are giving consumers some options where they're able to do a lump sum payment to bring the amortization back in line with where they need to be. But I certainly think that if you're in the type of variable mortgage and the payment doesn't change, you really should start looking at it. And it's something you should probably start looking at as soon as today.
And some Canadians are saying to their radio right now, but Clinton, if I had a lump sum of money, I would have done that already. I mean, it's a lot of pressure on Canadians. Do you think there'll be a really challenging time for Canadians in terms of choosing what to do next in terms of their housing?
Well, I think December is a challenging time anyway, Sam. There's certainly a lot of pressures from friends and family and really what's going on economically outside of what's happening with mortgage rates. We see the challenges at the grocery store, when you come to the till and you see, what the food order is. We see the challenges at the pumps. And, the mortgage rates certainly have exacerbated some of that for people. I think the one thing that we need to remember is it's impacting everyone. And it's not just consumers who this is impacting, Sam. It's impacting businesses and, availability of credit and cost of credit. So the ripple effects will be widespread, and that's the intention that the Bank of Canada has. So really what they want to do, they're trying to get inflation in line. We know the inflation was at peak here in Canada sometime around June and July, and the numbers even at the end of October were that, they were too high, but we're starting to see signs that inflation is starting to soften. Mm-hmm. It's really interesting right now with this last Bank of Canada increase. The variable rate mortgage product is more expensive now than where a fixed rate mortgage product is. And that is very unusual. And I think some consumers are really going to look in the mirror and decide, how many more increases can I handle? Obviously the housing costs have become higher and higher. And I think in some markets, even the value of the real estate has gone down. So I think some consumers are a little bit upside down. And I think there's going to be certainly a lot of conversations about what rate and rate product and amortization is going to work best for you. Mm-hmm. So I think some consumers are going to look at doing some transactions in 2023 to better their financial position. And, I always encourage consumers that, if you're starting to feel the pinch, it's better to do a transaction now than wait until it's too late. And I think sometimes people try to hold on, and sometimes you dig yourself a hole. So, I think the thing is that all signs are really pointing that we may be in a recession towards the end of next year. And, although that may soften the interest rates, Sam, and, inflation will come down, I think the other impacts from a recession are going to be widespread as well. So when we're talking about, lack of employment or people losing their employment, I think that certainly will become a reality, which will, I think, obviously be an impact as well.
We know the Bank of Canada had signaled that they were going to do a rate hike today. When the Bank of Canada does an announcement in the future, are they also signaling that they'll raise interest rates again? Do we know that already, Clinton?
Some economists think that we're almost at the ceiling with this 50 basis point increase. Some economists thought that, maybe 75 basis points prior to today will be where the ceiling is before, we're really in a recession type situation. If the 75 basis point, kind of theory rings true, we may see another small increase going into the new year. The Bank of Canada meets again in January. We're certainly going to be watching it. And, when the Bank of Canada gets to the ceiling, I think in some ways that will be good for Canadians. They can start making some decisions and planning around how can they stay the course based on what's going on with the rates. But I think it also signals that they may wait that ceiling out for as long as they can to bring that inflation in line. The governor of the Bank of Canada stated that they really want to bring the inflation to a number that is around 2%, which is lower than where inflation was pre-pandemic. So we're going to feel some pain in 2023. And, consumers, if you're in a variable rate mortgage product or if you don't even own a home, you're going to feel some pain due to the ripple effects of the Bank of Canada increasing the key overnight rate. And I think the one thing that I really want to, bring to the forefront, I think 2023 is really going to be one of those years that we need to focus more on needs versus wants. And I think the holiday season is a tough time to do that, Sam. We want to give a great holiday to our friends and our family, but I think we really need to look at the spending. I think cash is going to be king. And I think having access to credit is going to be important too, because we're already in the storm. And how can we weather that, and how can you best protect yourself through this upcoming year? I think we'd be remiss to say that we certainly have a lot of concerns for people who are in a fixed rate product that are coming up for renewal. Many people that are coming up for renewal now are in a situation that the rates are significantly higher than where that fixed rate product is. So, it's not just variable rate clients that are being impacted, Sam. I think basically anybody who owns a home, anybody, can be impacted by what's going on currently with inflation.
Always learn something from you, Clinton. It's not the news we were hoping for. I was hoping that the economists that were saying it was just going to be 1/4% were going to be right.
0.25. Some were saying even no increase. I think the good news coming out of this, Sam, is we may be close to the ceiling. So I think that's one little piece of solace. And, we really just need to buckle down here in 2023.
Thank you so much, Clinton. Appreciate your time today.